Hey guys, Peter Sun here, and today I want to talk to you about the single biggest mistake that most Australian property investors make, and it's the mistake that keeps 92% of all investors stuck with just one property while they're struggling to pay all their bills. Now, it's also the mistake that keeps most people working like slaves until they're 67 years old.
Well, more Australians are working well into their golden years because they can't afford to stop.
And it's the same mistake that causes thousands of Aussies lose money while the market slows down or interest rates rise, which has happened quite a few times since I've been in Australia. And the mistake is this, right? Most people are chasing capital growth instead of buying properties that will actually give them strong, reliable cash flow while letting capital growth take care of itself, right? And I know exactly why people are doing that, because the last 4 to 5 years, right, every property has gone up. Virtually everyone that owns property thinks they're a genius, right? And some of these properties have gone up by a lot. So yes, you've done well. So most people believe that this will go on forever. However, let me break down why this kind of mindset can actually cost you years of your life and potentially hundreds of thousands of dollars in lost potential income and capital growth. Now, if you're new here, I help everyday Australians invest in high yield, high capital growth, multi-income properties, mostly across Australia and Queensland and Victoria. Now, I've been investing for over 44 years and I bought 28 properties of my own. So I've seen what works, what doesn't, and most importantly, what makes a profitable property investment. You know, how to make those properties also compliant, easy to manage, and actually end up helping you retire a lot sooner, right? Most property investors are taught that if you buy in a growth area, you wait 10 years or 5 years or however long and hope that the value is going to go up. And look, capital growth is important, don't get me wrong. But here's the truth that nobody tells you, because they're all trying to sell you properties in these outer suburbs with very low income, right? Rentals. So they got to tell you it's going to grow in value, right? You can't eat capital growth. That's the problem. You can't pay your bills with capital growth. You can't retire on capital growth. Capital growth is only a paper gain until the day that you sell that property. Meanwhile, your holding costs like interest, insurance, council rates, those are real expenses that come out of your pocket every single week. Now, most traditional investment properties are negatively geared, means that you're losing money every month or you're just breaking even, hoping that one day the value of your property will grow. Now, that's not investing, that's gambling. And there's a much better way, right? I'll tell you why cash flow is the real wealth builder. Because the sophisticated investors, the developers of property, they all understand that positive cash flow is the engine of your investment. Capital growth is the acceleration. You actually want both. But without the engine, your investing car doesn't move. Because a strong cash flow property will pay for its own expenses every month. It covers rising interest rates. It provides extra income to spend every single week. And it also boosts your borrowing capacity, right, which helps you buy more properties faster and sooner. So it actually ends up reducing your long-term financial risk. In case interest rates again do rise or you lose your job, then it doesn't matter because you can still pay for the property because it's positive cash flow and you're getting money from it every week, right? And at the end of the day, it helps you retire sooner and with more income. So the cash flow reduces risk. Negative gearing and basically properties that break even actually increase your investing risk in the long run. So part 3, let's talk about the waiting game trap that everybody falls into. A lot of people buy negatively geared properties thinking it's going to grow eventually. And yes, as that's been true in the last few years, and that is true. But sometimes the property doesn't grow for 5 or 10 years. Right? And in that time, you probably poured, $20,000 to $100,000 into holding costs. You're stressed, right? You can't pay your bills. You're scrimping on everything. You can't buy more property because you don't have the serviceability. And sometimes you're forced to sell when something happens, like you lose your job or the interest rates jump substantially. And I've seen that happen in the past to many people, right? Now, meanwhile, the cash flow investor, right, they're building capital growth, equity, just like the rest of Australian investors, because their properties are going up as well. But they're also building strong cash flow and income which means they can build their portfolio a hell of a lot faster. Plus, they're building retirement security and much higher of retirement income if they choose to hold that property after they retire, right? So they're actually better off than the other property investors by a long margin. So let's have a look at what types of properties will deliver both. Now, rooming houses and co-living homes give investors the best of both worlds. Really high cash flow, plus an extremely strong capital growth. They typically offer you 8 to 15% and sometimes higher yields, giving you positive cash flow from day one. Right? You get income security because you got multiple income streams from several tenants rather than just one tenant. So if you lose that tenant, you got no income. Plus, you're getting exceptional capital growth as soon as they're built and tenanted. You don't have to wait years. I've seen some amazing increases, as you can see there on the screen. Right? So you're getting basically also higher levels of new build tax depreciation. And, some of them come with a 5-year, 10% rental yield guaranteed on selected properties. So you're not hoping for a good outcome. You're building a predictable, reliable path to wealth. So let's sum it up. Right? Capital growth builds wealth on paper while you're struggling to pay the bills. Cash flow builds wealth in your pocket, and you're building your paper wealth on top of that, just like the other properties do. So most investors choose growth, but the most successful investors choose income and growth, and they're the ones that make the most money in the long run. Now, if you want a property that actually pays you handsomely, protects your initial investment, and sets you up for retirement a hell of a lot faster and with a much higher income than any other property type, then please explore a rooming and co-living investment. I'm building a couple of these properties myself to increase my retirement income as we speak, right? And you can come along for this ride. It's only because some recent changes to zoning regulations that these properties have become so attractive, right? I have actually another video where I explain each step of developing one of these properties, as well as what areas are the most profitable to build them in. So you can have a look at that. So please make sure you subscribe to my channel. And then also download a copy of my free book, right? Creating Wealth with High Return Real Estate. It's got some information on the rooming house in there as well. The link is in the pinned comment. And if you want help building or buying a rooming house anywhere in Australia, especially in Queensland or Victoria, then please book a strategy call with me or my team by clicking the links I have included below this video. Or if you have your own land, then we can also help you build one on your land. So my name is Peter Sun once again. Thanks for watching, and I'm going to see you in the next video. And make sure that you buy something now, because the prices are just going up and up and up. There's a saying, when is the best time to invest in real estate? It's not today. It was 10 years ago, right? Today is the second best time, but do not wait. Right, the pressures of Australian population growth, the shortage of accommodation, it's created the perfect storm for these types of investments. So give me a call. You won't be sorry.